stock market is headed for a correction. That's the prediction coming in from James Rickards, who is the author of the New York Times bestseller Currency Wars. This, as Rickards believes that the President-elect Donald Trump's economic stimulus plans will not pan out, and it will cause a head-on collision between perception and reality. In an exclusive interaction with CNBC's Martin Song, the director of the James Rickards project also had something interesting to say about the course of the U.S. Fed rates decisions. Listen in.
I definitely see a stock market correction, perhaps a disorderly one, Martin. I'm not sure the Fed's ready to cut rates yet, but I expect they will raise rates in March. I think that's on track. But beyond that, either we're going to go into a recession or the stock market's going to have a very severe correction. Either one of those will cause the Fed to backpedal. They'll start with forward guidance saying, hey, we're not going to raise them for a while. You know, the Fed never turns on a dime. They take months to change policy, but I think they'll raise in March. Then something will hit the wall, either the economy or the stock market or both. And then the Fed will backpedal from there, starting with forward guidance and perhaps a rate cut later in the year.
Whether it's recession or a huge stock market correction, what is it going to be? What's it going to take to cause these two outcomes? I mean, what's the trigger going to be?
Right, Mark. First of all, it's already happening. There's basically a head-on collision coming between perception and reality. So what's the perception? The market's rising on the Trump reflation trade. So Trump wants to cut taxes. You know, Steve Bannon's talking to his advisors, talking about $1 trillion of infrastructure spending, cutting regulations. So all those things are viewed to be highly stimulative. So that's why the market's going up. The Fed's on track to raise. The markets expect stimulus. But here's the point. The stimulus is not going to come. We're not going to, the Congress has already said tax cuts have to be revenue neutral. That's going to take away the stimulative effect. They're going to balk at more spending. We have $20 trillion of debt, a 104% debt to GDP ratio. So we're not going to get this $1 trillion of spending. We're in the 8th year of an expansion, Martin. You know, Keynesian stimulus, if it works at all, it works at the beginning of an expansion or in a recession, not after 8 years. You don't get much bang for the buck. Not to mention the trade war and some of the other noise surrounding Trump. So all those things. So when the reality of no stimulus catches up with the expectation of stimulus, plus the Fed tightening, that's the train wreck. We're either going to have a recession or a violent stock market correction.
All right.